So this video is going to be about why some market maker models fail and why marrying a bias is the worst habit you could have when trading market maker models, because we all know, okay, everything is a market maker model. Every move away from the bias is forming a market maker model. So like here, as you can see, you gotta move up, down, market maker buy model complete. Move up, down, we should see this, right? Why didn't we see that? And why did this move then do what we wanted it to? And this all comes down to not marrying a bias and being adaptive with your trading and having the ability to read the higher time frame charts. So let's go on the hourly. And for those that have already watched my market review, then this will be pretty obvious to you. But this gap here is very important. So if we then go back on to that chart, okay, as you can see, this market maker model up, down, up, down, market maker buy model completed. Now where would we expect the price to go if we was patterning market maker models? Well, we've got this move up, this move down, we then seek here. However, we've got this higher time frame PD array with us. So what can we use from this? So we know that this move up, down, this is what we wanted to see if we was patterning. However, how can we change this view to make it still aligned? Well, move down, up, down. That is this move up into the higher time frame PD array is the market maker sell model completed. So when you've got a draw on liquidity, okay, say this zone is your draw on liquidity and you want to see reversals, okay, come up to here, so when you're not at the draw on liquidity yet, well, what do we expect? Well, market maker buy model completed, market maker buy model completed, market maker buy model completed. Now once we've come up to this, this is the same example. Move down, up, move down, would expect up if it was patterning. Now with the high time frame PD array, we can then see instead of this move down is going to be the market maker buy model, this move up into the PD array is going to act as your market maker sell model, and then this continues. Each move up then follows Does that make sense? I'll put some text. continuation monkey maker models until DOL is met, then seek opposing side of liquidity for your MMXM. Put that in the chat. So hopefully this gives you a bit of an understanding of you are on the right track. Okay, you're definitely on the right track. You just need to make sure you don't pattern market maker models, and make sure you don't find a continuation market maker model off of a reversal PD array. That makes sense. That's a good bit of text. Make sure don't find a okay. So hopefully this makes sense. Okay. Do not pattern the price if you're in a reversal PD array. That's like the most simple I can make it. So continuation market maker buy models are blessed until we get a reversal PD array. And now, question to be asked. Okay, if this taps in, why did we then expect a move higher into it? What time is this? 8:42. We're expecting a reversal off of this if time and price aligns, which it did. And the 8:30 news is not drastic. 8:30 news didn't tap into it. If 8:30 news tapped into it and then we traded away, then that would be the market maker sell model to the low. But 8:41 tapped into it. Is that the time to make highs of days? No. So then you have 9:30 till 10 to make your high of day. What do we do? 9:41. We then fill this gap. But we tap back into it at 8:35. So if you was on a 15-minute candle, what do you think that would look like? Okay, this is the original tap. 8:30 tap. Okay. We know the individual candle did not cause this big move up, because if it did, then we would have seen it continue lower. This could have been the high of the day, but the impact on news wasn't too big, so we didn't need to, you know, we didn't reverse off it fully because it wasn't a big impact news. If we'd have got something like NFP or CPI, PPI that comes up into it in one candle, this is one 1 minute candle, then yeah. But no, 8:30 taps into it, time isn't aligned. What do we then do? 9:30 candle opens. What do? We make the high of the morning session. This is the low. This is the high and that's the close. And well, that's the open. So your morning session candle looks like this. There's your morning session. Bang. Now, last part of the video. Why did we then finally reverse, okay, to the market maker buy model, buy side liquidity? What do we tap into, guys? What does it look like? What does this image look like? Just mark it like that. High, low. There would have been some sort of imbalance within this big wick and that big wick. Okay, what's this? Market maker buy model into this buy side liquidity. Now when we get our reversal PD array, we're not then going to find buys. We're either going to find shorts or we're not going to trade until we then come back in, because we know price moves like this, not like this. Complete one, and then just, well, that's actually a bad drawing because you could argue that. We know that price moves like this, not like this. So you can see that PD arrays push price to other PD arrays. Does that make sense? So you could have caught sells into this gap and buys to that side, and that is how you ping pong the market. So hopefully you enjoyed. I don't know what I'm going to call this video. Maybe stop panning market maker models, something like that. But yeah, it's good to be back. I'm active again, and yeah.